Hey, good morning, everyone. Welcome back to Seeking Dubai. So in today's video, we're about 1 month on from the epic once-in-a-100-year weather event. We had unprecedented Middle East tensions. We had a lot of holidays. And we had a perfect chance in April 2024 at the back of a very, very strong real estate market to have a little bit of a dip, have a little correction, maybe a bit of a breather, because the real estate market, particularly over the past 6 to 9 months, has been even stronger and continues on from like a 4-year upturn. So did that slowdown actually happen? Not really. April was actually one of the best performing Aprils ever in the history of Dubai's real estate. And so what we want to do in this video is actually deep dive into some real numbers. One of the best parts about this market is that it's very open and transparent, because every single transaction that takes place is uploaded onto the Dubai Land website. We have companies that have the access to that API, and they've built some incredible reporting tools which anyone across the world can access from a phone or from a laptop. And then this is all built on the back of a blockchain, where every property owner can actually control and manage their entire property portfolio from a single app, right? So the technology is there, the data is there, so why not use it to tell us what's actually taking place in this market? And that's what this video is going to be about. We're going to also look at some macro and secular trends. I think you're actually going to find this video quite interesting. It might give you a very balanced approach as to what's taking place in terms of supply, in terms of transactions, what people are buying, how big is the offline market, and also try to answer questions like, if the market's too overheated, and what that perspective of future supply would mean to the market. So that's the idea for this video. In the next couple of videos, I actually also want to do quick snapshots of real estate development activity in the other major Emirates, and then do a detailed analysis of major projects taking place in Dubai. So that'll be the idea for the next few videos, hopefully, that we'll be making. And if you find this content useful, please do consider liking this video, subscribing to Seeking Dubai, and it'll be a great way for us to stay in touch, and you'll get notified when you make content like this in the future. So if you're looking at this chart over here, we have had 12,000 transactions in April, and just slightly lower than what we had in March, but keeping in pace with the rest of the months of this year. And this is the same kind of trend. Every month, we're seeing 11 to 12,000 transactions take place in Dubai since at least May of 2023. Now, this 12,000 is in spite of the fact that we had the last 10 days of Ramadan, we had the Eid holidays, so a lot of people were traveling. We had the floods, which were absolutely epic, and it seems like a distant memory right now, but that was pretty impactful. And then we also had that whole 10-day period where we were all holding our breaths with this Israel-Iran tensions as well. If you're looking at, even through last year, the market has just remained consolidated, very strong, very consistent. And the last kind of dip we had was almost 13 months ago, in April of 2023, where we had 8,000 transactions. And if you're looking at this chart over here, this is actually showing you year-to-date transactions historically. So we can see that the first 4 months of 2024 have been better than anything we've seen previously, and we're even ahead of the pace of 2023. And 2023 was a record year for UAE real estate transactions, almost 130,000 real estate transactions, 410 billion of value. And then this year so far, it's at 48,000 transactions. And that's 160 billion worth of transactions. And just for perspective, this transactions we've already seen in 2024 in the first 4 months is higher than the annual transactions we saw in 2017 through 2020, right? So the market has expanded quite a lot. Okay, so this chart here is showing us where we are in the cycle, right? We've broken past previous all-time highs back in September of 2023. It's been a really strong 6 to 9 months. We haven't really had any pullbacks in terms of the growth of this index. This is reported by Property Monitor. It's one of the oldest indexes. It's a really good one to follow. All the links of the description for these sources that you're seeing here, Property Monitor, DXB Interact, Bayut, the links are in the description. There's a couple of reports there as well. So please refer to that and do your own research as well. So over here, one of the things to point out is rental values. So it's showing you strong underlying demand. It's obvious to us who are here in Dubai in terms of the number of people here, the limited amount of units you're seeing in any of these big communities that are available. And, we'll talk about that in a second. But rental prices is a great indicator of the underlying demand. And rental prices are up 23% for residential, and an astonishing 82% for office space and retail just over the past year. So if you look back from 2021, the rental markets actually outperformed the capital values. And in a lot of cases, rental values are up anywhere between 80 to 100%, if not more, in a lot of areas. So Dubai has become a bit more unaffordable, which is a drawback. But that is one of the reasons we're seeing a lot of new supply to kind of balance that out. But we'll talk more about that in a second. So this chart over here is actually showing you how the ready market's being squeezed. So you would think with prices being at all-time highs, there would be a lot of sellers in the market. But if you're seeing the ratio of ready transactions versus off-plan, currently it's only 32% of the transactions are ready. So that's just showing you the tightening of the ready market. So off-plan is now 68% of all transactions. And this has not always been the case. So if we look back in early 2022, 2 years ago, the ready market was obviously majority of the transactions taking place. And then there was quite a little bit of equilibrium till around Q3 of last year. And since then, off-plan has actually overtaken the ready market. The other thing here you can see is that the off-plan market doesn't just mean people buying directly from the developer. There's 30% of all those off-plan sales are off-plan resale. That means there's a healthy trade that's taking place. A lot of end users are then purchasing properties that are nearing completion. They can take over payment plans. You do have to involve more cash and pay premiums, but this is also showing you another strength of the market. So if you want to summarize that, in April 2024, 32% of real estate transactions are for ready properties, 48% are directly from the developer, right, off-plan, primary, and then the off-plan secondary resale market, that's like 20% of the market. And in terms of the size of transactions, so this is also on DXB Interact, 63% of transactions are below 82 million. Dubai caters to all types of budgets, and it's not everyone who's buying, $1 million homes. So if you're looking at this chart over here, this is the index where we are at right now. The current average price per square foot in Dubai is 1350 dirhams per square foot, $370. So you can benchmark that with other places around the world. Now we can also look at this chart and look back at some of the recent history. So that'll help us kind of talk about some of the trends that we're seeing for the future. The last major upcycle we had was in 2012. Started with the Arab Spring, and it culminated with us winning the Expo 2020 bid. And that was like kind of sell the news event, and then we saw a trickle down. But this current cycle we're in, it's actually much more broader and much more expansive. It's just been a couple of like pullbacks, but it's been a straight line up for almost 4 years. And it's a 60% growth in that period. Now, if you look at the downturn that took place in between this, started in 2014, it's 6 years, 35% decrease in prices. And this is kind of like a slow and steady decline. But one thing that I would like to point out is that even though prices were going down, this was not a market where transactions held up, or it was not like some kind of a dead market. Transactions kept going in all these years. And in fact, a lot of the major communities that are real estate hotspots right now, where that's helping cater to the number of people moving into Dubai and helping its expansion, these were all launched in this downturn of the market where prices corrected over periods of time. And then, of course, since then, we've seen that steady and explosive upturn in transactions and prices. Now, before we talk about supply numbers, it's also worth pointing out that the story of Dubai is not isolated. It's happening in all the other Emirates. So we've seen a lot of transactions happening in these kind of markets as well. But just to kind of put some perspective on Dubai's market size, in Q1 of 2024, Dubai had 35,000 transactions worth 108 billion. And just for perspective, Abu Dhabi was at 5,400. Sharjah has seen 100% year-on-year growth to 6,146 transactions in the last quarter. And even Ajman has had like 701 transactions. And Ras Al Khaimah, unfortunately, I couldn't find any recent data, but there's been, a few thousand transactions that have taken place there, especially on Marjan Island, where the Wynn Casino is coming up. Abu Dhabi is a global center. Sharjah already has a huge population, and now that they have Freehold, they're rebuilding their city and expanding it in different ways. Sharjah does have quite a big land bank. So now what does all this supply and all this construction actually mean? What does it translate to? Well, the data is also there. So we have 677 projects that are currently under construction. Total number of units under construction is 212,000, and 131,000 of that, which is 61% of that total future supply under construction, has just been launched since January of 2023. So if you're looking at this chart over here, you can see there's almost 100,000 new launch properties took place in 2023 alone. And if you're looking at 2024, that pace is as strong as the previous year. So that is a lot of off-plan projects that have been launched, right? The numbers are clear, but let's just try to put some perspective on it. So in the last downturn from 2014 to 2020, while prices were going down, there's the government-backed developers, a lot of the government-backed developers and the major developers were launching some major master plans. And those projects were continuously sold out. Obviously, prices were different. Payment plans were much more attractive. And that is the same kind of supply that is fueling Dubai's expansion right now. In the same kind of way, what we saw from 2009 to 2013, there weren't that many off-plan launches. Same thing from 2019 to 2021. Also, the off-plan market has slowed down a lot. So prices started increasing, population starts increasing, and then the market mobilizes, and now we're really seeing it kind of take off. So there definitely is a lot of new projects that are coming. And then we can also look at deliveries. So over here, we can see from 2013 to 2018, it was a consistent 15,000 units entering the market every year. Now, since 2019 to now, it's consistently 35,000 units coming into the market. So what's going to happen in the future? So this chart over here is showing you all of the supply under construction as per its construction status. So you can find this on DXB Interact. It's a really good chart. So what you're going to see is that 68% of the transactions are also in a very initial stage of construction. So their handovers will take place mostly from 2027 and onwards. But if you're looking at the supply that's actually going to be handing over the next 24 months, is much more limited. And it looks like about 65,000 new units will enter the market over the next 24 months. So it's just going to be keeping pace with that 35,000 units we've been seeing. And that is why most analysts and experts believe that market pressures will remain till at least 2027 and maybe start to ease. But that is, of course, if everything stays the way it is right now. And so, a lot of people, wonder if the developers have just gone rogue. But a lot of the plans that they always follow, and because a lot of them are also government-backed developers, they're just following the government's directives. And, every 10, 15 years, they have these new ambitious plans, which have all been met previously as well. In 2022, they had this study where you can see that there's 740,000 ready residential units in Dubai, and just 50,000 were under construction at that time. So these are more like 2021 numbers. And so, with their urban master plan of 2040, they're estimating 5.4 million people by 2040. I think it's reasonable. And out of this 550,000 that they project a city of 5.4 million would need, we can already see like 213,000 of that is already under construction. The markets are going to overreach at times, but the developers are responding to market demands, and they're working around this master plan. The government's going to do their part with the infrastructure, with the regulations, and just making it the best place in the world to do business. And I think their ambitions are far greater than most other countries in the world right now, and they've built up the foundation to execute it. So that's the idea that drives this theory. But, if you're looking at this market from another perspective, there obviously is a lot more leverage in the market, right? So if 68% of the future supply is just 0 to 20% built, that means these are all on payment plans. And so there might be a little bit of leverage in the market. But the other thing is that, is this 68% just a bunch of speculators looking to, flip it on handover? And I don't think that's actually true, and I know it's not. A lot of people are buying these properties for a whole array of reasons. You can make a huge list, but mainly it's backed on the golden visa, which was never built into prices previously, and a chance for meaningful ownership, which you're not getting in a lot of parts of the world right now. And the fact is, with all these developments coming, that affordability factor is going to remain there. And I think that one thing that you should be cautious of is, just because it's a hot market, if you're buying for capital appreciation, because some people look very confidently at the camera and tell you that they're going to go up by another 30%. I'm not sure if that's entirely true. And while there are pockets of opportunity, when we are potentially in a late market cycle, you have to actually be a bit more clear about what your end objectives potentially are. So now I just want to kind of take the rest of this video, which maybe is already too long, but if you're still with me here, I just want to point out some of the different factors in place right now, so which you can kind of understand where the demand is coming from. So some of the exciting things that are going to happen, of course, is that the story of Dubai is not isolated. This is potentially a golden age for the whole GCC region. And these are the major cities that are being built. There looks like there's going to be a unified Shenzhen type, unified visa. So there's going to be free movement of people. And I think that's just going to be a start of other things to come. And of course, we know about the real networks that are now starting to connect all the countries together. And then we have different narratives and motivations for people from across the world to be looking at Dubai at any given point in time. Right now in Europe, it's more of a bleak picture. So there are some troubling, uncertainties there in terms of, the recessions, manufacturing decline, lower birth rates. So these are longer secular trends as well. A lot of the continent is on a war footing. And then you've got U.S. elections, which makes times uncertain for them. And it just seems like there's going to be a raise in taxes as well. So there is a flight of capital and businesses towards GCC and UAE. And then we have India, which is the rising superpower, one of the most closely aligned partners of the UAE, the third largest trading partner. And then we've got this new narrative for the US-led trade route, which would run from India through UAE and Saudi Arabia. So Indian buyers are always the top 1 or 2 buyers of properties in UAE, right? So it's the largest expat base and population. Then we have the Russians, who are an integral part now of Dubai's culture and fabric. And so we did see a decline in transactions in 2023 from Russians, probably a bit of deleveraging as they'd come in at earlier times in early 2022, bought up waterfront properties at incredible price points, right? And then probably, did a bit of profit taking as well. So they've done immensely well. And if you visit any of these islands outside of Palm Jumeirah and Amar beachfront and Port de la Mer, if you look at even places like Sharjah Waterfront City, Marjan Island, Mariam Island, you're going to see that every one of these places, the Russians are buying waterfront properties at really good kind of price points and early on as well. So if you ever want to buy waterfront properties, follow the Russians. They usually know what they're doing. And then we've got China, right, which is also very closely aligned with the UAE and GCC. And with China, we have buyers coming back into the market. And then we saw here with Aldar just like a few weeks ago when they just launched Athlon. This is a couple of weeks after the flood. The entire project sold out in 48 hours. And the number 3 buyers were Chinese, right? So that tells you something about that kind of market coming back. And then over here we have the United States and Canada. And so traditionally we haven't previously seen a lot of buyers coming in from United States in previous cycles. I mean, they were always there, obviously, but not in very, very significant numbers. But now it's very different in the last 2-3 years. So the first thing is we're seeing a lot of smart money and Wall Street move to Abu Dhabi and DIFC. These are the future and fastest growing financial centers in the world. But we've also got a lot of the AI story. UAE is actually considered the 3rd largest player in AI right now in the world. And then, of course, we have the influencer effect. A lot of Canadian migrants are coming back after leaving Dubai from 2015 to 2019. And then, of course, U.S. nationals of Pakistan, Arab origin, they've always bought here in Dubai. And over here, if you look at the map, the other major buyers are, of course, from the MENA region. There are not a lot of wealthy countries here, but there are a lot of wealthy people in these countries. And a lot of them are part of the Dubai ecosystem. Okay, so I hope this video would have given you some hopefully balanced perspective on what's taking place in the real estate markets here in the UAE and what the numbers are telling you, what the trends are saying. If you ever require any assistance or want to discuss the market, potential opportunities here, just follow us on YouTube or on Instagram, where we put out content on some of our ideas from time to time. Or you can, if you want to stay in touch with us on a regular basis, you can send us a message, we can get in touch, and we could potentially add you to some of our Discord channels, where we update you on different market opportunities and things like that. And so I hope this video added value to you. Thank you very much for watching, and have a great day ahead. Take care.